Hello. And welcome, guys. Let me just check the audio. Yep, it looks like we are live now. And let me see the audio again. It looks like we are live now. Yep, at least at my end, the audio is working. So, hello and welcome, guys, to the 73rd edition of the Trading Opportunities webinar. This is your host, Nirav. And if you are listening to me live on your phone, computer, whatever device, make sure to let me see your messages in the live chats by saying hi, hello, whatever. Right. And let me just go on with the legal disclaimer here, first of all, before we proceed with anything at all. So here's the legal disclaimer, guys. Suggesting all content presented here is purely for educational purposes. I'm not soliciting buy or sell. If you do go on the use presented here for your trading, investing, or for any other purpose, you yourselves will be liable for your profit, your loss, or loss of profit, or whatever situation may arise. Right. With that being said, let's now head over to our quick introduction. Before I head over to the chat, I seem to have some messages there. Where is it? Yes, so this is our YouTube channel, 50 Years Market Analysis, where this live stream is currently being broadcasted. And as you can see with the number, this is the 73rd stream in the yellow. And we have captured 98 moves, to be precise, in our past 71 webinars. So what happened with the 72nd webinar, we will see today, of course, right? So we go live just for those who are new here at 2 p.m. GMT, 7:30 p.m. IST, or just convert it to wherever you are in the world every Saturday, right? As far as the introductions go, I am also the author of the book Think with the Markets. And I also have a track record of all my past webinars and videos combined, or compiled, I should say, over here. You can just go to 50s.com/forecast-accuracy and check it anytime. 2016, 2017, 87.5, 2018, 84.6, 1988, 4.888, 2020, 88.5 to 2021, 82.22. After 2021, I started to do these webinars much more regularly. So we have not compiled anything because I don't have the time to go over 71 of my own webinars and listen to my own voice. So, anyways, with that being said, lastly, this is the way we will proceed with this webinar. First, we will discuss Euro USD, crude oil, followed by gold, S&P Nifty, and in the end, Bitcoin. And I must say, 1 month has passed since I started the private group or the private Slack group. Response so far has been exceptionally good, right? And I should make it publicly available very soon. What I'll do is I'll release an email update. If you are not subscribed to the emailing list, please do so by going to my website, and in the top you will find email subscription. Just enter your email, and I only send weekly emails, so you don't have to worry about that. So what I'm talking about is the service was currently only invite only. I think I might start it for public for a while and see how the feedback is. If you are interested, of course, keep an eye out for it. And if you are interested and you are not subscribed to the emailing list, you will miss the email I released today or within the next 24 hours. So in that case, you can just contact me using the contact us page. With that out of the way, let's now head over to our actual discussions. First on screen is our chart of Euro USD, and let me just see the comments. Hello, Philippe Calfon. Nice to see you again in the webinar. Hello there. And hi, Christian. So now let's proceed, guys, with our first chart. Over here is the chart of Euro USD. 1 second. Sorry about that. So yeah, here's our chart of Euro USD, and let's see what's going on over on this counter. Let me just quickly squeeze it a little bit and see What's the outlook here? Let me check one more thing very quickly. So the current outlook is, see, one thing I remember is we were able to capture some longs here because I was able to track this triangle. I was tracking this triangle for quite some time. And the whole idea we discussed around 12th July or whenever we met when this triangle was forming was basically this, that if we see the market go higher and then take a support at the BD trend line on the or the triangle trend line, this white trend line, then this is an exceptionally good long opportunity. We did see that and the market did also go up. So we were able to capture part of this, but that is history now. So now let's see what's going on. So the current count seems to suggest 3, 4, 5, and this is 3, this is 4. So previously I was thinking that we have possible 1 here, 2 here, and 3 here, which should be followed by a 4, which may have ended over here and then flied high, flown high, whatever the correct grammar is. But what happened is that the market did not really care for that. So what is happening right now is two things are possible. So either this thing is over here, and this is the start of a new downward movement. And the second thing, which is a little bit of a bullish scenario, is we know in Elliott Wave, when the market goes up as an impulse, it will look like this. So we will call this a wave 1 up, we will call this a wave 2 down, a 3 up, a 4 down, and a 5 up. However, in this case, if the market has given this big of a pullback, see our 1 is over here and 2 is over here. So that is done. But the thing is that 3 does not generally or very rarely gives that big of a pullback. So I do not think that we have a 3 or 4 here. What I think is that we are currently inside this 3. And if we magnify the wave 3, we will find that this wave 3 again has 5 waves inside of it. That is called the fractal nature of Elliott wave. That is, we will have 5 waves inside the wave 1, which is this one, inside the wave 3, which is this one, and inside the wave 5, which is this one. So if we magnify this 3, it should look something like this. So it will again have a 1, let's say a Roman letter 1 and a Roman 2 and a 3 and a 4 and so on and so forth. You get the story, right? Now, how does that play out in context with this thing? So if we look at this, we can now count it as this Roman 1 from the 3 and this as the Roman 2 from the 3. So if that is the case, then wave 2 will generally retrace to 50-60% of wave 1's movement. So this is the movement of wave 1. 50-60 will be somewhere here, which is the market, which market is already currently at. To be more precise, let's see where the box is coming. So the box is coming between 1.11267 and 1.10923. So I am interested in the lower level. Let's see if that was it. Yes, so I am interested in the lower level. I believe that if this is the correct count, if this is the 1 up and the 2 down, then I think it should take support around 1.10923, which is the lower part of this white support region, and then the market can turn up. Of course, if it does not do that, if it goes below it and then takes resistance at this white box level, then of course we are going with the second hypothesis. That is, if something like this happens, then the market flow goes down. Then again we'll go with the second hypothesis, which is the market is heading lower, right? So long story short, Euro USD wait for 1.10923 and wait for sign of strength over there. If we see a sign of strength, then we'll look for longs. Otherwise, it's just a wait and watch. Nothing much to add here. In case you have any doubts or questions on this chart, please do let me know in the comment sections. I'm just heading over to crude. Interesting developments in crude. Last time when we discussed, I think I discussed that we were able to capture multiple trades here. Yeah, one fact, guys. Last week, whatever trades we did, all of them, literally all of them, were closed in profit. And of course, all of them are posted live in the Slack group. So if you are a member, you would have also seen them live there. But I did send a screenshot of it in my emailing list. Again, if you want to keep updated on what's going inside, then subscribe to the emailing list on my website. Right. So now let's not discuss about last week. Let's focus on currently what we have on hand. Crude oil. Currently, it may be inside a wave 4. Let me just remove everything and just show you what's important. So this is our point of reference or the starting point for this count, 66.962, marked as our POR. Now from here on, what we have is an impulse heading in the upward direction. This is the wave 1. This is the wave 2. Let me just quickly mark it so that we can just show it when the counts are removed. So this is the wave 1 up, the 2 down, the 3 up, and currently it's going sideways for wave 4 is my expected or is the count that I have currently in mind, right? Now, a few things here that are quite odd. Firstly, the wave 4 is taking too much time here, which is sort of the thing the wave 4s do, but it is definitely highly disproportional compared to the time wave 2 took. So that is a little bit bothersome, but then again, this is crude oil and but it is still not worthy. I just wanted to point it out because it is a little bit out of the ordinary. Now, next thing is if this is the correct count and this is really the wave 4 incoming, then I do not expect it to go lower than this low anymore, which is around 73.9, let's say 73.92. So I do not expect it will go lower again. If it does do that, even if it goes lower than 74.524, where I have set an alert, then I think it is doing something else because the retracement is already quite deep and it has gone to 50%. 50% of this leg, right? So I do not expect it to do that and go lower again. Next thing, if it is not doing that, then most likely the pattern I think should be a triangle, right? In which case the minimum target is that the market will take out the high 77.332. So that's your target minimum. We can of course always calculate higher targets. I think I have some higher targets here already, 79.241. But to be more precise, I will have to find the end of this triangle, and only when I have figured out the end of this triangle I can give you more precise targets. So will be sort of thing that I update in the private Slack group later on for the members to see. So long story short, for now sideways movement may continue because if it's a triangle, then triangle will have 5 waves inside of it. The first leg down is called an A, then a B, then a C, and then a D, and then a E. So once all these waves are complete, then we expect the market to take off, right? So long story short, sideways, then bullish. And one thing to note, in case it's a running, then it can take out the high first. What I'm basically saying is that the triangle does not really care about the highs. It can go up and still be a triangle. How do you factor that in? Well, that's something you will have to check on the lower time frames, and you really need to have the proper knowledge of Elliott Wave to do these things. But I just wanted to point that out. So that's about it for the story on crude oil. We look for long sideways movement expected, and targets. I'm not very. I'm not saying these targets are very precise, but the current one we have is 79.24. So more precise targets are only time will tell, right? Nothing much to add on CL. If you have any questions, do let me know, and I'll just move quickly to gold. And by the way, let me just check the audio again. Yeah, it's working. So now let's head over to our next chart on gold, where I do have a position which is not working out. So let's see that and the logic and everything. So gold, this is our point of reference, starting point, which is at 1892 level, 1892, right? Yeah. So from this level, we have wave A, wave B, and wave C in progression. Inside of that, we have 1, 2. I'll just quickly mark them and remove the actual count so that there is no confusion. Right, so there it is. There's the count. We have an three-wave progression in the upside direction. This is called an impulse, sorry, correction in Elliott Wave terminologies. It shall be represented like this in the box. Wave A up, B down, and C up. And the C in this case looks like an impulse. So basically, an impulse means that it will have five waves inside of it. So if we magnify this wave C, we will see something like this inside of it. And that is the very thing I've labeled as the Roman 1, 2, and then a 3, and a 4, and a 5. Right. So if you look at the actual chart, you will quickly realize that the 1 is over, 2 is over, and 3 of the C is also over. So I entered longs somewhere around here, near the highs basically. And the idea was that if this really is a wave 4, then it may go a little bit lower, and then eventually it should go up for the wave C, fifth wave of the C. Sorry. So if we compare it with the rough counts I have drawn on the right, what I'm really saying is that I'm expecting this leg to play out. Now, where is the problem here? The problem is that it has gone way too deep for a wave 4 on gold. It is almost near 38.2, which is currently placed at 1956. So technically, it can go to 1956 level, but that was not an expected level when I entered longs. The reason is that it was looking like a sideways movement, and generally in a sideways movement, the market will stop at the low or near the low. Basically, a flat correction is what I'm talking about. This is a little bit unusual, but I still haven't booked my losses. My stops are at 1952. Right, I probably will move them a little bit up. Depends on the price action and the rest of the analysis, which I'll do after my alerts are triggered, which are currently at 1955. Right. So what is happening here? The other possibility is that if I'm wrong, then maybe this was the 4 and maybe this was the 5, and the C was already over. So my longs are completely incorrect, which I think might be the case. And generally speaking, trading the end of a move in a correction is always risky. So it looks like a bad trade. Now, how do we differentiate what to do in this condition for those who are completely out of the market? Right. So in this case, if the market goes around 1950 or lower, right, and then sustains below it, let me just show you with everything off. If the market goes, let's say, to 1950 and then sustains below it, as in goes sideways and maybe a little bit up, but then coming down here, that is if it just plays out here sideways or whatever, right, then that will be a sign that this C is not going to complete here. It was already completed here, right? So basically 1950 is the alert level, and below it we will observe the price action, and the price action will tell us if we should enter shorts here or not, right? And if this market is going to turn, I think it is already around 1956, so we should see some sign of reversal. But I think this impulse is too strong, and anybody who is out should not really care for this idea and should let it play itself out. And as far as the new longs are considered, above 1970, you can get a little bit serious if you are interested in taking longs and you are currently out on this counter. I don't think there's anything to add here. If you have any doubts, please do make sure to type them in the comment section. Well, if this is really a C complete here, why did not I check that? Let me see. So I should have checked it earlier. The 50-60 retracement is still not penetrated. It has taken resistance at the 50 part. This is the 50-60 resistance box, by the way. So generally, I would like to see the market at least go somewhere in the middle of it. It's not required to, right? So it does sort of give us some targets. If the market does go up for wave C, then the best it can do is, or the fifth wave of the C, then the best it can do is to go to 2007, right? So that's just one additional point to look out for here. Let's now head over to our chart of S&P's 500. Guys, before we proceed, I'd like to request you to make sure you hit the like button and subscribe if you haven't already. And much more importantly, do not forget to share these videos. I have noticed that the views have definitely declined in the last 2-3 webinars. So that basically means the YouTube algorithm will also stop promoting the content. So you definitely need to up your game a little bit and make sure this content reaches the right people by sharing it with the right audience, whatever you have, Slack, Discord, Telegram, whatever you use. So with that out of the way, let's now head over and see what happened with, where's that text? Yeah, now let's head over to our chart of S&P's 500. Where is there is a comment here? Let me just check that very quickly. Philip is asking, is the micro count in 5 weight down so far on gold? Let me see what he's really asking. So he's asking about the internal count. I think 15 minutes should do. Yeah, it is in the 5th already. It is already in the 5th way. So if it has to stop, it should stop anytime. That's basically why I have not taken out in loss or taken my longs in loss. This is the 1, 2, 3, 4, 5, and if we draw the trend lines here, then it should be something like this. This is already posted in the Slack group. Okay, so now let's hopefully that clarifies your question, Philip. Now let's head over to the chart of S&P's 500 and see what it is really doing. You're welcome. So S&P 500 has sort of achieved the targets and everything, and it has given us good trades. Actually, all willing trades in the last few days on S&P. But the impulse seems to have finished. So I'm having some. Let me see, where should I start it? Yes, there it is. So I'm having some doubts here on the progression of this counter. First of all, progression of the counter never has any doubts. The doubts are on my own analysis, I should say. So from this point of reference, where is this? 4380. This is our point of reference or the starting point for this count. If you notice, I have counted it as 1 up, 2 down here. Where is that? I've taken the 3 here and I'm considering the 4 here. Now, this is definitely not looking right. Why? Look at the size of the 2. I think the 1 was here. Whatever it was, the size of the 2 is extremely small compared to this humongous 4. That's one reason to bail out, and that would suggest that maybe the 3 was here. It can definitely be counted there. So let's just say we are recounting the thing. Now, if this is the count, then this progression itself does not look complete at all. It's definitely going to go lower. Where will it go lower without even Elliott Wave analysis or anything? I think it will definitely go and at least test 4517 and then the lower range to 4500. So I think this market is definitely not a long market, not a market to be going long right now at all. I might be interested in it if it breaks. This is 4, 5, 6, 7 to the upside, right? If it breaks that level, then sorry. So if it breaks that level, then I'll be interested in considering long opportunities. Otherwise, it's not something I want to go and buy. As far as other things are considered, let me see some other things that I want to check over here. 3, 4, 5. Well. If this is the 4, then impulse is complete. Then yes, that's the point I wanted to make. 1 here, 2 here, 3 here, 4 here. Yes. So look at it from this point of reference, which is the price level of 4,105. Now, if that is the correct count, then your 1 is over here. Let's just type it in. 2 over here, 3 over here, 4 is here, and then the 5th is complete. So now if that is the case, then we have an impulse completed, right? And this is a big impulse, 4,100, and then it has gone to 4,580-ish level. So if this is complete, then even the 50% will come much, much lower. So there you have it at 43.45. So 43.50, right? 50-60% is what I'm talking about. That's the level we always look at. And even other levels like 38.2 are at 4,400. So long story short is if the downside continues, which it could, then some extreme downside levels are possible, which include 4,400 and followed by 43.50. Right, so that's just something I wanted to point out. How will we know if that is in play or not? Well, we already have the twofold trend line in here, right? I'm talking about this line. If that is broken, that's our first sign of weakness. Any retest of it will give us an exceptionally good trading opportunity. So that's the classical setup. Sometimes it plays, sometimes it not or doesn't. So what I'll do is I'll right now just go on the actual chart and click on the red trend line that I already have over here. I think it needs a little bit of adjustment because I updated the count but not the trend line. Now I'll just place the alert here for less than. So whenever the market goes lesser than any point on this trend line, then or crossing the trend line to the downside, I should say, then I'll get an alert, and that will be the what do you call setup for selling this counter, right? So long story short, bullish scenario, we definitely have to wait and watch. There is no clear evidence for it right now, right? I've already mentioned level 4, 5, 6, 7. Above that, we will look for longs. If not, then below the trend line, the red trend line, we will be looking to consider selling opportunities. That's about it for our discussion on S&P. If you have any doubts, please do type them in the comment section. Otherwise, we move on to Nifty, which will be followed by BTC. Interestingly, Nifty actually did things precisely as expected. Now, what do I mean by as expected? In the last webinar, we were talking about Nifty, and I mentioned it very clearly that if the market goes and takes a support above 19,600, then we will definitely be considering long trades. And the target to the upside was, let me just adjust it by the way, and let me draw the 19,600 level. Somewhere here is 19,600. So the clear idea I discussed in the last webinar was that if it goes above 19,600, then we will be considering long trades only at 19,900. What I want to do right now is I want to check it on the actual webinar. Let me see. I have the recording open. Nifty was at around 25 minutes. So here is the recording from the last webinar. Let me see. I'll just full screen it, right? So let me see where I discuss that. I just want to show it for the sake of record for new people who might be entering. So this is 19,600 level that I'm marking over here or pointing, and I'll remove my current mouse here. So as you can see, the idea was that if the market goes above, this is the recording. This is not my current anything. So if the idea was that if the market goes above 19,600, then we will look for 19,900. Let me see if I pointed the level by writing it down or something. Yeah, there it is. So I just wanted to show that this was discussed very clearly in the last webinar. So even if you are following the webinars and are not in the group, then there is extreme value I provide. And my point in saying that is that I would like very much if you guys appreciate this value by hitting the like and much more importantly, sharing the content. As I have observed currently that in the last 2-3 webinars, our view count has reduced considerably. So nothing can continue without the effort of people. This is YouTube. This is not like I don't receive much of anything from these ads. I just run them so that YouTube promotes my content. I don't think they will promote it without ads. But frankly speaking, it is worth nothing, literally. So definitely we need more views. So we'll really appreciate that. So that being said, the last content being shown, let's now discuss what's really happening right now. So this is a count right now, and the thing is that it has already completed the fifth wave as well. So if you were in the Slack group, then I did post that we will be looking for sell-off below this trend line, this orange trend line. I mean, this is common knowledge how I draw this trend line at this point. So we were looking for sell-off, and what happened in the session is that the market gapped. I'll just magnify it to show you the power of this analysis. So the market literally gapped at the trend line, right? If I could draw over it, that would make it much more clear, right? So market literally gapped at the trend line, gapped down at the trend line, actually below the trend line. And then when it closed the candle, it closed it right near the trend line. So this is basically telling us that our deduction is correct, right? If the market does not care for the trend line, then why would it gap down below it and then take resistance above or near it, right? So these are things that you need to observe as things progress. Without that, you are not really analyzing the markets at all. So this has confirmed that our analysis is correct for now. And there is something here which is worth pointing out. In the longer time frame analysis, which I would not like to discuss currently, just point out something. In the longer time frame analysis, there is a possibility that this market will give a correction which can go to 19, sorry, not 19, whatever this is, which can go to 18,600 and preferably lower. So let's say somewhere within this range. So if this downside count is current, then we do not or we will not see any move up than 19,977, whatever the last high is or the current high is. Now, why is that important? Because this will be a very big move down if the market decides to reverse before taking the next leg up. And this count is quite strong right now because the market has literally gone to the reversal level 9900 and shown some weakness here. Now I don't have validation for it right now. That is, I would need to see some more sign of weakness and preferably, let me show you preferably what I'm looking for. To confirm the more bearish scenario, preferably I want to see the market go below this green trend line, this one, not the above one, this second green trend line. So if the market goes below this green trend line, then I'm definitely considering the bearish possibility as much as a very strong possibility, right? Unless the market does that, we cannot say anything with the very strong conviction. If it does that, 18,600 and lower levels are opening up for us, right? And lastly, if that is not correct, I mean the bearishness is not going to come in, then we should soon see a break of 19,900, and that can bring this market in an extremely strong bull run, right? I've seen it said extremely too many times, because that would mean that this whole thing was accumulation. It has gone on sideways for quite long, and everybody who wanted to accumulate big positions have accumulated it. And do keep in mind, when I say accumulation, I don't mean you going and buying in 10 lots of it or something like that. Accumulation basically means preferably in the stocks. People who wanted to buy the underlying stocks or the constituent stocks of this index, they don't want to buy 100 or 1000. They may want to buy much bigger amounts of it. So once they are loaded up, only then they will let the market go up. Basically, the theory goes on like this, that the participants are keeping the prices lower so that they can accumulate it at a cheaper price, and anytime the market goes and touches a high, they themselves will sell it. So for instance, if they have accumulated, let's say 10,000 shares at this point in time here, 10,000 shares, and if the market suddenly goes up, they do not want it to break the high or the recent high. So they themselves came in and shorted the market down with 3,000 shares, and 3,000 shares was quite enough to bring the market into a new downward movement. And when the market continued to go lower in this leg, let me just change the color. In this leg, they accumulated 10,000 more, and then the next leg came up. They again shorted the market with the 3,000 of the long position they have. So net 10 minus 3, they had 7 over here. Came down 17 minus 2, they now have 15 over here. And then they still wanted to accumulate more, so they shorted with 2,000 or whatever. And then the market went down in this leg and they accumulated 20,000 more, right? At this point, they were full, their bags were full, and they bought 20 more. So net they had 35 at this point. So after this particular speculator, I'm just assuming that the market is constituent of just one speculator. If you want to research more on it, this is called the composite market operator theory. It dates back to 1920s. So, but anyways, long story short, what is happening here is that we are seeing artificial movement here. I'm not sure uh, how true it is, but it does help us explain things are. But once this guy has accumulated all his part, then he does not hold the market, right? And that basically takes it. That basically makes it a super bull run, right? If the big guy, has accumulated his positions, then he won't stop it, right? This moment you can see it has shortened. Shortening of downward movements is also a sign of bullishness. Anyways, I don't want to give a lecture on all this theory and whatnot, right? I have a course for that purpose. So that is it. I think I have discussed the movement on Nifty's 50, and that is quite detailed discussion here. Wasn't required, but I think I've discussed the most points. If you have any questions, you can just type them in the comment section. Otherwise, we'll move over to our last chart, which is called Bitcoin. Not called, which will be Bitcoin. Let's now head to this BTC. Philip, what had you typed and deleted? Now you have made me curious. Anyways, let's head over to BTC 38. Right, so now BTC has not done anything worthwhile or worth me taking a position in it. Basically, what has happened is that my idea was, let me just explain what my idea was in the last webinar. It was very clear that we wait for 32,080 level. Actually, the correct level is here. The alerts is placed a little bit lower. 32,200-ish level, right? The idea was that the market can go to 32,200 and then reverse, right? And if it goes above 32,200 and sustains above it, that is forms a little bit of a price action here, then it can just fly, right? So nothing like that has happened. So I was out of this market. I had last to last week, I had taken some longs. They did not work out. I had to close. Then I tried it again. Then it still didn't work out, and I had to exit in loss again. So my own losses really clarified that this market is not going to head higher very quickly. So I decided I'll just leave it out until it goes to 32,200. Now what's the case here? if it really is going to go higher, then I think we need to wait for a little bit more clearer price action. This does not look like a very good wave B, and it is possible. What is possible here is, let me just point out by drawing it here. It is possible that this market may be in some complex correction, and then it will go down for C, right? Now, if it does that or if it doesn't do that, we don't really know. But what we do have over here is our support region, which is 28,140 to 27,320. Now, if the market does go towards the downside, then this is where we expect the market may take support, right? Unless the market does one of these two things, let me just clarify. Unless either it goes within this region and takes support, or gives us a reversal somewhere here, or it goes and takes out 32,200 to the upside, we are not interested in any longs, or I am not interested in any longs, sorry, right? And there's nothing much to plan here. The plan is very simple. I just pointed it out to when to look for longs. And lastly, if it sustains below 27,320, or let's say 27,300, it goes below this white resistance, or sorry, support zone, and sustains below it, then that is not good, and that is a sign of extreme weakness, and much more downside is open. Why? Because it also has a bearish count, I think. Let me see. Let me just remove everything. I think I had one here: A up, B down, and C up. So I have not pointed it out very clearly here. Let me see if going to the daily gives us some clarity. Yeah, the idea was that this was all a three wave up: A up, B down, and C up. What is this? I'm basically talking about a flat kind of correction. In this particular case, an expanded one. So this leg down is, this leg up is called an A, and then it goes lower than its origin point called a B. It basically traps shorts. Short sellers are trapped over here. Then once the short sellers are trapped, the market goes higher than the start of wave A, which is the higher than the start of 25,182 level. And then long buyers are trapped here, or bulls are trapped here. Now that the market has taken out the short sellers here, and then trap the bulls here, then it will show its true nature by going down. That is a very rare pattern, because it does require a lot of energy on both ends, right? And the confirmation on it is also late. But if it is the pattern, then this bearish movement will be something out of the ordinary. I mean, it's going to 14, 15, 13, whatever. A lot lower levels are possible. Just wanted to discuss that. I don't have any evidence for it right now. It's good to keep in mind. And yeah, those of you who don't know how I do my analysis, don't go around pointing things out. I do things very diligently, and it does take many hours of time at times to do this analysis. This is preferable. This is completely acceptable to go this much lower. I have checked the levels, percentage, and everything. Don't go around just seeing things and saying that it is going much lower and this pattern not valid and everything. You don't know as much as I do, honestly. I'm not trying to boast anything. I just don't like stupid comments. So that's about it for BTC. I don't think I have anything to add here. And lastly, as I said in the beginning of the webinar, if you are interested in getting updates on when the, what do you call, the Slack group is going to get launched publicly. Currently, we were on request only. Then you can just subscribe to the emailing list, and the details will be sent to you probably within the 24 hours. If you do subscribe at a later point in time and did not receive anything, just contact me via the contact us page. Okay, do type in the subject matter as Slack group access or something, right? And what I'm really talking about, the Slack group, I should actually just give you a glimpse on what is really going on in there. I do post my analysis and trades here. This is the Slack group. I did minor longs. Deep pullback is possible. This is the chart. This is book profits on all longs. I did minor longs. Blah blah blah. You get the point. I post all my trades here and everything here, not just crude, gold. I mean, multiple instruments are covered here. And yeah, if you want more details, just contact me. That's about it, guys. Make sure you hit the like and 100% do not follow. Sorry, do not forget to share the content. Right, as I said, our views have decreased considerably in the last 3-4 webinars. So make sure you share the content as much as possible. If you can share it on 3-4 platforms or 3-4 groups, do make the effort. It takes a lot of effort to produce this content, so I will appreciate that. And thanks a lot for tuning in. I'll see you guys in the next one. Bye.